continuation trade right on the open with an opening drive. And Deb is going to come in here and walk through the setup for us. Interestingly enough about the setup, she didn't actually make the setup, but look, this exercise is just as valuable if you haven't made the trade as whether you did. You're essentially rehearsing the trade in your mind during the downtime, and whether you made that trade or not, creating a playbook of trades and setups that make the most sense to you is still just as effective. So that's great. What we do here, just to give you guys a little bit of a summary, is people from our desk come forward after they've archived the setup that makes the most sense to them. They do it in a template form. We call it the SMB template form. And Deb will walk us through the trade and the highlights and the lowlights of it, and I will ask questions along the way and highlight the things that we feel are most important. If you have any questions, use our chat. We will stop and answer them. And on that note, I am going to bring Deb in here, and let's go through the trade.
All right. Let's start with the big picture. At the time of the trade, the SPY had made a new all-time high about 3 days prior at 189, and since then it had been trading in a range above 185. The morning of the setup, the SPY gapped up and traded higher for a few minutes, and then it traded in a range, selling off in the afternoon. From this chart, you can see that the 189 had served as resistance a couple times, and 185 is basically was the all-time high from December and January, and is now serving as a support area. On the day of the setup, you will note that the SPY gapped up, but it didn't. The SPY itself did not really have a strong opening drive. It basically just kind of drifted lower into the midday, and then late in the afternoon, it sold off. The trade strategy I'm going to talk about today was for AOL. It showed up as a strong stock compared to the market on the radar after having a gap up and strong high volume opening drive higher. This trade setup that I want to highlight and that I wanted to document is after you notice.
All right, let's switch.
Okay.
Yeah, let me make one point. So, and I think this is important. So, before the open, you want to think about. You want to be thinking about getting really good idea flow, and then I think one of the things that's undervalued in the community is there isn't enough urgency. That's a really good word. There isn't enough urgency to spend time thinking about the technology that they need to make sure that they're continually searching for setups that make the most sense to them. So look, most people before they open, they think about the stocks they're going to trade. They spend a tremendous amount of time doing that. They might spend hours preparing. But they actually don't spend as much energy and attention thinking about ways to supplement their idea flow when the market opens. And I would actually even say that the number one default position is to be connected to a chat room, which is great and very, very effective. But I still would say that there isn't enough attention that people are giving to making sure that they're arming themselves with really good supplemental checking of the setups that they want to trade. And so having something like the radar, having things like filters that are finding your best setups, aren't optional anymore. They're really mandatory for all traders. And I pound the table on this on my desk And we have quants that help our guys build automated filters. And not only do I pound the desk with the guys, but I pound the quants to go visit with the guys to make sure that they're really doing the work that they need to be doing. And it's going to be the case that in 3 to 5 years, that most of the markets trade the same. We don't really have open access to global markets right now. That does not exist. We have global businesses. We have a global economy. We do not have a global marketplace. And it is just the start for people understanding that they need to be more bionic with their trading, meaning they need to have filters that make the most sense to them with their best setups. But this is just the first step along the lines of something that I think is the big opportunity. I think this is the big opportunity coming forward for all electronic traders, and that's what we are. We express our trades electronically, which is, once you can do this, once you can find the best setups and be armed with technology in U.S. markets, well, you can with others. And while our markets are the most opportunistic, there's going to be better opportunities at times for other markets. And if you can learn to supplement your best idea flow with something like the radar, the SMB radar, or with something like working with quants to build filters that are finding your best setups, well, then you're going to be doing that in other markets as well. And think about how much more P&L you're potentially going to be putting yourself, setting yourself up for. So that's why that's important. I mean, we want to see the big picture, and 3-5 years out, the SMB radar is not going to be indigenous to the U.S. markets. It's going to be, and the way you think about building your filters is not going to be only used for your U.S. equity trading, but for many other markets. So, let's just not poo-poo the fact that Deb is doing a good job here of finding something on the SMB radar. What's really going on is she's setting herself up to supplement her idea flow, and in time, really become more bionic.
All right, thank you, Bella. The trade strategy is a trend continuation trade after you find that this is something that has had a really strong opening drive, and the trade is a trade to hold until there is a reason to sell. The intraday fundamentals for AOL is that it trades with a beta of 1.3, and the average 30-day volume was around 1.5 million shares, which is good, because really what we look for is a stock that's trading with at least 1 million shares per day, and it has an average trading range of 1.6. AOL has a short interest of 8%, which isn't really all that high, but it's enough to cause a bit of a short squeeze. And AOL had the following news today, or the day of the trade, on briefing.com, which was kind of benign. During the pre-market, it just had a one-line blurb that said that AOL was being positively mentioned at Jefferies, who believed that the network segment is underappreciated longer term. It was just a little one-liner. The longer-term technicals for AOL is that it wasn't really at any key levels that would have alerted me to the opening drive move it made, unless the previous resistance support area around 43 in here. If I had had an alert set, then perhaps I would have seen it as it was in the process of the opening drive, or if there was an alert set at this low pivot low here, that might have caught the at the gap open. But AL wasn't exactly one of my basket stocks, so I wasn't watching it. And it did not trade during the pre-market after the news was posted on briefing.com. But on the open, it gapped up, and it just kept going up for 3 minutes. You can see 3 really strong candles in a row right there. And then it paused, and it had a very shallow pullback. And then it broke above that high that it made in the first 3 minutes, and it ran for another 15 minutes for a 2.5 point up move, which was about a point more than its daily average trading range. Note the volume that came in during that opening drive. So perhaps if there had been a filter.
So you raise a good question, which is what's kind of going on here.
Mm-hmm.
Hey, look, we don't necessarily see a huge level that would be a catalyst for AOL having such a strong opening drive, right?
No.
It's possible. I wouldn't call Jefferies a tier 1 firm, but they're a legitimate firm. They're probably a tier 2 firm. It is possible that their reasoning was so persuasive that it did cause big institutions to start buying. But that's not that likely. So there's something else going on here. And we always talk about the big picture. And the big picture is something for stocks, and the big picture is something for the overall market. But the big picture that's going on in the marketplace that's relevant to this trade is what?
Was that the market had gapped up also, but it didn't really have a strong opening drive either, though, like AOL did.
Yeah, and so that's a good starting point. But what's really going on in the marketplace is there's a rotation going on. There's a rotation
to safety. Yeah.
There's a rotation to old tech stocks. And
Yes.
so if you go and take a look at Microsoft, you go take a look at AOL,
3M.
you will see this rotation that's going on. And so that's adding to everything you're seeing here.
That's right. Okay. Good point. Later in the morning, AOL formed a base, and it held above VWAP, except for one minor push down below, where they tried to push it down below, but it came right back above, it held, and then it bounced, and it ran up and made another high before it finally succumbed to the market sell-off, which was going on later in the afternoon. As I wasn't in this trade, as Bella mentioned earlier, I wasn't reading the tape. But if I had been reading the tape, I'm sure it would have shown the incredible strength of the opening drive with bids and offers lifting continuously. And then during the basing process, the tape would have shown the support area around, right, holding above VWAP. And then when it did poke down below VWAP and came right back above, you would have seen that on the tape, that the bids were coming right back in and holding the level right above VWAP, and then the offers would have started lifting, and you would have started seeing the next momentum drive higher. So the reason why I wanted to document this setup is that our head trader here had highlighted it in our afternoon meeting, and to me it just was such a great setup that I wanted to make sure I committed to my arsenal and would be able to trade it again the next time I saw it. It doesn't have, AOL would have been a difficult one to find, this particular opening drive, but there are going to be times when you are actively watching a stock on the open, and I want to be able to recognize this setup again, and so that I'll know what to do with it when I see it in the process. So we had a gap up, and then, the 3 strong candles that I mentioned, and a good place to enter would be when it breaks above that first high that it made in the first 3 minutes, and you would enter right then. And then, since it's a momentum play, there really wasn't any consolidation areas where I would have felt comfortable adding, and I would want to sell as soon as we had a closing candle. And I'm watching a 1-minute chart for this opening drive. On an opening drive, I like to watch a 1-minute chart. And when
you can look at, people look at ticks.
Mm-hmm.
You can look at a ticks chart. You can look at a 1 minute. You can look at a 3 minute.
I sometimes look at a 15-second chart if the stock has a lot of volume. But normally a 1 minute. But when you see a candle that clearly shows that it's closing below the previous candle, then that's a pretty good indication that momentum drive is over. And I would have wanted to close that first trade if I had been involved in the opening drive at that point. But really the point of this setup was to say, hey, I missed that opening drive. Wow, this stock had a really great opening drive. I would expect that it would, find an opportunity later in the day to continue that strength. So how would I be able to get into this stock and play a continuation trade for the uptrend? And what you want to see is after it starts pulling back, you want to start finding the support level that develops. And several times it wicked down to this level here. So after it is shown that it's developing a support level, you would want to maybe start with one lot and get in with your stop just below that level. And then as it starts to go up, you might want to add into it as it starts to gain momentum and then take some off if it starts looking kind of or you could just, keep your stop in place from the beginning. You might have been stopped out here when it came back down below VWAP, but as soon as it pops back up, you'd want to just add right back. If it doesn't work, you sell and then you reevaluate, and reevaluating tells you, hey, that was just a test, and it failed going down. It's going back up. I'd get back in, and then you really want to add when you start seeing momentum. And you would want to add when it clears that previous high that it made in here.
That's where I'd start to feel. That's where I'd like to start to feel where I'm right. That's where I'd start to think I'm right when it's getting above that high and holding above that high.
Right.
So it does a nice job of holding down here, but when it gets above this high right here.
This high here.
And holds above that.
Yeah, that's.
I feel like I'm right now.
This is where. I indicated I would add above this high here, and then there's another little shallow pullback, and then you would definitely add as it breaks above that high. Or I think what I said that I would lighten up as it pulled back from this previous high here. I'd lighten up my position a little bit, and then I would add back into it as it showed support and then coming back up, and I would definitely add when it broke above it.
Yeah.
But I probably would have been stopped out of the added shares right here because it came right back. My pencil's not working. It came right back below that high, but then you would want to add right back when it came right back up, your added shares. And then that way, that would allow you to catch this move all the way up to here. And then here you've got the candle. You might want to wait for a couple candles that show that, hey, this is definitely rolling over. Another thing to keep in mind is that the market was rolling over at this time also. The market had already started to roll over and was showing weakness compared to AOL. So you would want to have that in your mind as you're in this trade.
So was 6? Was there long-term resistance near 6?
I am not sure.
Okay.
I wasn't sure. I was mostly just focusing on what's it doing intraday and what the market's doing. The market's rolling over.
Yep.
So
was the market rolling over?
Here I can go back to
when
the market right away. It gapped up. It didn't have. Remember that AOL gapped up, and then it had a strong opening drive higher, and then it formed a base, and then went higher. Where the market gapped up. Only went up just a little bit, and then it immediately started drifting lower. So AOL was definitely showing a lot of relative strength compared to the market. And here's 1 o'clock, 1:30. The market really started to sell off at 1:30, and I'm not sure why this isn't clicking very quickly. And AOL. Well, let's look at the previous slide. AOL, you asked if there was a resistance level, and I mean, it came above this resistance level here, this previous high, but it didn't really stop at anything I see unless you want to count this level right here. It's pretty close to a resistance level.
Is that the price it fell from?
About, yeah.
Okay.
Very close. But if you notice the time,
so let's just let me switch with you, and
okay.
let's just sort of walk through a couple of. So let's go over a couple of principles. to help you think about this trade. So let's bring up the SPY intraday. So to me, when I look at the SPY intraday, there's a lot of interesting things to learn from this chart. Is this the best chart you have for this?
Yeah.
Okay.
Oh, well,
so
I have a daily chart on the previous chart, but that's the intraday.
So when I take a look at this chart and I think about something that's gapped up a lot, yes, I can see that the stock is that the overall market is showing a little bit of weakness when it's not really trading above there. But remember, it's gapped up. But you can start to see that it's making lower highs relative to here in the SPY. So it gets below here, and then now it's making lower highs. It's kind of we're starting to roll over there, right? We're starting to roll over right here.
Yes. That
and right
blue
here.
line is the open line.
But when I take a look at this overall, yes, we're starting to roll over, but it's kind of hanging in there. I mean, we make new lows right here, but then we come back to the same old resistance. To me, this is kind of the line in the sand right here. All right, and to me, this is clearly the level up here, and we've gapped up, and we're going sideways. We haven't really made an impressive down move yet. We're hanging in there, and I gotta think that we're not really as weak as I would have thought when we started to get below here. But having said that, we now have, after the open, we now have a lot of information, right? We now have, from 9:30 to 1 o'clock, we now have this really important range. This is an important range, and this is really going to tell us probably where the market's going to go after we break. And then we did break. All of this is a break to the downside. Yes. And when I see that, I would really expect the market to be trending lower after that. So when I'm thinking of trading AOL, because the market has now broken this level right here, I would be concerned that I would now start to see extra weakness in AOL relative to the way I've been trading. So, you mentioned right here that, at the beginning that, all right, we're sort of slightly trending to the downside as AOL is going up.
Right.
But I think we're hanging in there. But I think this move down here could drag AOL down a little bit.
Yes.
Okay, so that's that.
Was it about what, 130?
Yeah.
Okay.
So let's take a look at AOL's chart. So we're taking a look at that 130-ish area.
I'm going to cut that off before the 130.
Okay.
I don't have the whole thing.
So you don't have the whole thing. So
no. It really did sell all the way back down after that, though.
So when I look at this, and you remember how we got above this price right here?
Yes.
It's very unusual. This is a good risk reward to be buying right here.
Yes.
And after something gaps up like this, forms a base like this, and then holds above it, that's a really, really good long. And I'm feeling very good about myself on the long side. Now, I am going to be looking for things that would mitigate the strength of this, essentially gap and hold higher. The market getting weaker could be something like that. Finding longer-term resistance could be something like that. So it does seem like the market rolled over too much on us when we got below that opening range. Yeah. And it does seem like we found a little bit of resistance on the longer-term charts in AOL. So, we want to be putting all of that together. When I'm here, I'm going to feel really good, and that's a trade to hold to me. And it's just, there has to be a reason for me to sell. The market getting weak might be one of those reasons. It going to find longer term resistance might be some of those reasons. Honestly, it wouldn't cause me to get flat. it might cause me to lighten up.
Mhm.
But if you're going to spend your career buying right here, and long-term resistance is not near,
Right.
that's a position of strength.
Okay.
You want to be in trades like this.
Okay.
And you just sort of want to be developing your reasons to sell. But that's a powerful position to be in. It didn't necessarily work, and maybe it didn't work because of the market, and maybe it didn't work because of the resistance level. But that's a pretty good trade. Okay. Trade review.
All right. Like Bella had mentioned earlier, I didn't actually make these trades, but I wanted to document the trading opportunities and setups that the stock presented on this particular day, so that the next time I see them, I will have a lot more confidence to make similar trades. And AOL demonstrated that it was a very strong stock in play during its opening drive. And if it is not a stock you regularly trade, it probably would not have been something you would have been watching during the opening drive. It did not trade during the pre-market, and volume did not become outsized until later in the opening drive. But it is always a good idea, as Bella mentioned, to have your filters and your eye on the radar, and to find strong opening drives like AOL put in if you missed them, and look for opportunities to put on a continuation trade. And then with such a strong opening drive like AOL had, there is a high likelihood of a trend continuation. So this is something that I definitely want to look forward, for in the future.
So let's just go over the setup, which I think was really opportunistic. So you get a drive. So you get a really powerful opening drive, right? That's the first thing you definitely want to see. And the other thing is you very clearly have support, and that support is not much lower than the high, and then it holds above the high after lots of time has gone by. You've got this sideways action, you got this bull pennant forming up here after you have a very, very strong opening drive. Okay, and then we clear the overhead resistance and we hold above it. That's a trade you really want to be in. The only thing that's going to get in your way there is a market that turns, some sort of breaking news in the stock, or overhead resistance in the longer term charts. Okay, on that note, we'll talk to you guys soon, and trade well.
Hi, I'm Mike Bellafiore, author of the Playbook and One Good Trade, co-founder of SMB U and SMB Capital here in New York City. If you want to learn more about SMB, please go check out smbu.com. Check out our blog where we share tons of trading tips, trading stories, trades we're in, trading anecdotes, and also take the time to sign up for our 10-day free training program, which we offer to the trading community at smbu.com. We hope you enjoy it. We hope to see you on the site. Trade well.